Ever felt lost in the world of investing? Like you're standing at a financial crossroads with a map written in a language you don't understand? You know you should be investing, building a nest egg for the future, but the sheer complexity of it all can be overwhelming. Picking stocks, understanding bonds, deciphering market trends, it can feel like a full-time job in itself. That's where robo-advisors come in. They're like having a personal financial advisor, but without the hefty fees. These automated platforms use algorithms to build and manage your investment portfolio based on your individual goals and risk tolerance. It's a hands-off approach to investing, perfect for beginners or those who simply don't have the time or inclination to manage their investments actively. But here's the burning question we're tackling today. Does Questrade, a popular Canadian online brokerage, offer robo-advisory services? It's a question many aspiring investors ask, especially those drawn to Questrade's reputation for low fees and diverse investment options. To understand the answer, we need to understand what Questrade is. Questrade is primarily known as a discount brokerage. This means they provide a platform for you to buy and sell various investments, such as stocks, ETFs, mutual funds, and options, at relatively low commission rates. They empower you to be your own investment manager. You make the decisions, you execute the trades. Now, a robo-advisor, on the other hand, takes a different approach. It handles the investment decisions for you. You typically answer a few questions about your financial situation, goals, and risk tolerance, and the robo-advisor then creates a diversified portfolio tailored to your needs. It automatically rebalances your portfolio over time to ensure it stays aligned with your goals and risk profile. So, where does Questrade fit into this picture? Does it offer this automated investment management service? The answer is yes, but with a slight twist. Questrade doesn't offer a standalone robo-advisor in the same way some other companies do. Instead, they offer what's called Quest Wealth portfolios. This is their managed investing service, and it functions very much like a robo-advisor. Quest Wealth Portfolios provides professionally managed portfolios built with ETFs. You can choose from various portfolio options based on your risk tolerance, ranging from conservative to aggressive. These portfolios are designed to be diversified and cost-effective, offering exposure to a broad range of asset classes. Here's how it works. You complete an online questionnaire that assesses your investment goals, time horizon, and risk tolerance. Based on your answers, Quest Wealth recommends a suitable portfolio. Once you fund your account, Quest Wealth takes care of the rest. They automatically rebalance your portfolio, reinvest dividends, and monitor its performance. One of the key advantages of Quest Wealth is its low fees. They charge a management fee based on the value of your portfolio, which is generally competitive compared to other managed investment services. This makes it an attractive option for investors looking for professional portfolio management without the high costs typically associated with traditional financial advisors. Now, let's address some common questions people have about Quest Wealth portfolios. First, what's the minimum investment required? This is an important consideration for many new investors. Quest Wealth has a relatively low minimum investment, making it accessible to a wider range of people. This can be a significant advantage for those just starting out. Second, how are the portfolios constructed? Quest Wealth portfolios are built using ETFs, or exchange-traded funds. ETFs are investment funds that track an underlying index, such as the S&P 500. They offer diversification at a low cost and are a popular choice for both individual investors and professional portfolio managers. Third, what about taxes? Quest Wealth offers both taxable and registered accounts, such as RRSPs and TFSAs. This allows you to invest in a way that aligns with your tax planning strategy. Fourth, how is Quest Wealth different from simply buying ETFs myself through Questrade's brokerage platform? This is a crucial point. While you could build a similar portfolio yourself by buying individual ETFs through Questrade's brokerage platform, Quest Wealth provides the convenience of automatic rebalancing, dividend reinvestment, and ongoing portfolio management. It's a hands-off approach that saves you time and effort. You're paying for the management and the convenience. So, to summarize, Questrade does offer a robo-advisory-like service, but it's called Quest Wealth Portfolios. It's a managed investing service that provides diversified ETF portfolios based on your risk tolerance and financial goals. It offers the convenience of automated portfolio management at a competitive cost. Now, it's important to understand the difference between using Quest Wealth and using Questrade as a self-directed investor. If you're comfortable researching investments, picking stocks or ETFs, and managing your portfolio yourself, using Questrade's trading platform directly might be the better option. You'll have more control over your investment decisions and potentially lower fees. However, if you prefer a hands-off approach and want professional portfolio management without the high costs of traditional financial advisors, Quest Wealth Portfolios could be a good fit. It's a convenient and cost-effective way to invest your money and build a diversified portfolio. Ultimately, the best choice depends on your individual needs, preferences, and investment knowledge. Consider your time commitment, your comfort level with investing, and your financial goals. If you're new to investing or simply don't have the time to manage your investments actively, Quest Wealth could be a valuable tool. If you enjoy the process of researching and managing your own investments, using Questrade's trading platform directly will likely be more appealing. Remember, investing involves risk, and there's no guarantee of profits. It's essential to do your own research and understand the risks involved before making any investment decisions. Consider consulting with a qualified financial advisor to get personalized advice based on your specific circumstances. With that said, thanks for watching, and until next time.